Oh my God. Today was insane, team. We're going to dive into today's price action. We're going to talk about this epic sell-off that we had today. And we're going to do this pretty quick because I'm heading off to happy hour. Let's do it. We had our headline indices. S&P 500 finished down 3.38%. The NASDAQ QQQ finished down 4.1%. Our IWM small caps finished the session down 3.29%. Dogs of the Dow were down 3.07%. And our ARK Innovation ETF was down 6.42%. Pretty much all of these indices closed right on their lows. And look at this expansion in volatility, team. This is finally some fear in the market that we have not seen for quite a while. Really, since the lows in May, we finally got it. If you watched last night's video, you know, pretty much we were very well prepared for this. The percentage advancers was very low across the board. We had a volume of only 6.9%, and the trend model, which flipped to a +3 yesterday, flipped all the way back down to a -3 today. VIX Heat Map, oh my gosh, look at this bloodbath, team. So it was pretty much like widespread across the board. Nvidia, which reported an awful earnings report the other day and somehow rallied on it, finally gave back those ill-gotten gains, team. And this was really all catalyzed by Jerome Powell today. And to be honest, you're going to see so many narratives and it's like, what did he say specifically? Like, what changed? And to be honest, very little changed. It was really just to be honest, I actually think that this whole rally was basically like a setup. And they basically brought the market higher. They brought it right above that 20-day simple moving average. And they led the cattle to the slaughter. And they slaughtered those people that turned bullish, that thought we were entering a new bull market right at the start of the Fed's quantitative tightening program. So Fed speakers, they've been saying for weeks, hey, we are not going to change our trajectory. Inflation is still a problem. So far, we've gotten one month-over-month number for July that's finally been a sequential decline out of, the past 6 months that have been outrageous inflation prints. So it's not just like, it's almost like a chart of a stock. Even though it's bullish stock, does it just move up and to the right and never have a down tick? No, there's little ticks that goes up and down. So to see inflation just have one single month that was down and just assume everything's better, the Fed's going to capitulate on their program, like the whole thing kind of made no sense. Sectors, we had the cannabis stocks. I remember remarking yesterday, like, this is weird, cannabis stocks ripping. Chinese stocks, definitely keep your eye on these. And we're going to be doing our weekend watch list for all Pristine Capital members. Just putting this out there. We're definitely going to be watching this. We have one setup specifically that we're really watching in this group. ARK Innovation ETF obviously was very weak and really just broad-based, red across the board. We had high beta, which sold off 4.53% in terms of style factors. And remember, we went through this last night as well. Everyone just bought call options yesterday. So look, think about it, we had a big sell-off. Friday was a big sell-off, I believe Monday as well. 2 days during this week, just deep red action. And then we had one little red consolidation day, one green sideways action day, and then just one day of rallying. But investors were just loading the boat on call options, and the whole thing just didn't really make any sense. And it seemed like something was wrong because look at this. Oh my gosh. It's still going down. It's down 3.7%. That is wild. But here's what we saw that just honestly made the whole thing just nonsensical. The dollar. The market was selling off when the dollar was ripping to the upside. Then the market started rallying as the dollar just put in what looks like a bullish consolidation here. I mean, the dollar closed out on the highs. So that didn't make any sense either. The same thing for treasuries yesterday. Treasuries had a good day, right? But it was we had one green day in treasuries. So it's are we going to rip back to the highs? Look how many red days we had for the treasuries and look at the path they're on. So we did end up closing below this monthly value area for this 10-year treasury futures contract. we have to remember that when the market goes this risk off, there typically is a bid for treasuries just as a flight to safety. So it's tough to get any signal from what these treasuries did today. But let's take a look at the S&P 500. And I've noticed this year, whenever the market just rips into a binary event, and it's just like everyone throws caution to the wind and everyone gets long into it, that's typically when there's a high degree of risk heading into that event. And so now here's the landscape pretty much. Like, we have, these are all things we've been covering. We have a market that's technically damaged. Like this, we had some nice short-term momentum coming off of the May lows, and our group, we really took advantage of that, and we pushed the pedal to the metal for quite literally this entire run higher. And now we have technical weakness. We're no longer above that 20-day simple moving average, right? We're approaching the 50-day. Not to mention, we have technical weakness on the higher time frame. This weekly chart, look at the year. So all this is telling us, like, you want to think about this like you're playing poker, and a lot of investors, they are hurt going into the last quarter of the year. They are hurt, they're down on their performance, and there could be jobs at stake, portfolio managers getting fired, hedge fund managers getting fired. So the whole landscape and the psychology of what is going on changes. I think during this rally, there were a lot of investors that missed that bottom, and I'm sure they were desperate to try to make up some P&L, and there were trend followers, there were all these different strategies, all these different factors as well, and that really just pushed the market higher. But I think now we can see that river card, and look at what happened. We flushed below this yearly point of control, and now we're below this yearly value area as well. So we have weakness on the higher time frames. Now we've got weakness in terms of this daily chart. We have weak seasonality that's approaching. This is another thing that we covered in detail. We also have the Fed's quantitative tightening program, which is going to begin in September. And then not only that, month-end flows, anything can happen with those month-end flows. But the kicker is this month, I mean, now maybe it's a different story, but it's not like, oh my gosh, like stocks sold off this month, so as a rebalancing flow, we're going to buy into stocks. That might have changed today, but I don't think it's like a huge tailwind behind the market. But TBD on that. I have to actually do my research on that now that the market's gotten a little bit softer. But nonetheless, there's honestly just very little reasons to buy stocks now, which is the difficulty, and that's where this air pocket comes in. Did Jerome Powell really say anything revolutionary? Did he say anything different? No, he pretty much said the same exact things he's been saying. And funny enough, I think investors were just kind of like playing pretend for a while. I think there was a rally. People were trying to juice it as much as they could. But now it's almost like the cat's out of the bag. And we see what happens when the cat just exits the bag and everyone's got to cover on the same day. This is what can happen. So if you got caught in this, that is okay. It's happened to me plenty of times as an investor as well. Plenty of times as a trader. It's all about just picking yourself up and dusting yourself off. Now, there's always something to learn from all these experiences. Trust me, I've had plenty of them. I've made almost every mistake that you can make as an investor or as a trader. So honestly, like, today's a good day. Go back in your journal or whatever. And yeah, just definitely take a look, see what happened, see if you took your stops, see if you didn't, and just learn from it and get better. So what do we have here? Let's take a look at the NASDAQ. NASDAQ also pulling back almost at the 50-day simple moving average now. What else do we have? Let me see, my siren is going off. That is some news coming out. It's nothing big at all. I just closed it. We have the Russell 2000. And the Russell 2000, yeah, this thing is losing its key moving averages as well. And we also have, where is this? Let's take a look at the Dow Jones. Obviously, that's going to be losing it as well. The Dow Jones almost at the 50. And look at crude oil. Crude oil, it's not like it had the best day ever, but it was up 0.49%. That's exactly what the market really doesn't want to see. So yeah, very tough day in the markets if you're long biased. And to be honest, heading into today, I came in with pretty much a short bias. I got my portfolio hedged up yesterday. But I thought coming into today, I was like, I could get barbecued today as well. So honestly, it can happen to anyone. So what did we do today? Chinese equities were just very strong. And so I went to play tennis this morning because sometimes when there's a binary event, I'll get so messed up. If I sit at the desk from 6 a.m. to 8:30 waiting for that number, I'll get banged up. So I played tennis with one of my friends this morning, got back on the desk at 8:30 flat. And I noticed like Chinese stocks were up big. This CWEB, we got long the double leverage China ETF yesterday. It was already up 10% from my entry. So I had no idea what was going on, but I just closed out a piece of it. Closed out 25%, but I just got back on the desk. See if this thing is trading plus 10% in the pre-market. I just took a target on it because I was like, this is a no-brainer. Got to take something off. As the day started progressing and the market got very weak, I had these Palo Alto common shares. And I closed these out. I'm sorry, this is a typo. It's 667.39. And I had paid, or no, 567, sorry. I had paid 557.5, so it took maybe like a 1% winner here. And then I moved my stop to break even on the rest of the shares. And then I closed out another 50% of CWEB for $60.29, essentially a scratch. And I'm going to keep the 25% of this position on. And I'm reducing my size in case the markets get ugly. It can be very dangerous if you're holding leveraged ETFs into a sell-off, even if the ETF's showing relative strength. So just wanted to get that off the books. And let's take a look at these. Where was it? Palo Alto. Yeah, so Palo Alto, the stock's doing pretty well, and it's still above my cost basis. So you can see I have an alert set here. This is my break-even point. So if that alert hits and it triggers, I'm going to go ahead and close out the rest of my position just because I want to make sure I don't end up losing money on this. It's always about just managing your downside risk. CWEB, double leverage China ETF. Yeah, this thing was up 10% in pre-market. I at least got one target off and then closed out another good portion of it for a couple pennies of a winner, basically a scratch. I still have the remaining little portion of my trade on. And this is crazy. Look at what's going on in DQ. So DQ, we're long this stock via call options, and this stock for a while has just been range bound. Oh my gosh, the fundamentals are so good, but why is it not moving? And to me, this looks like we have a new investor in here that is buying this. So I really want to monitor this. My calls expire in October. I'm in the 65 strikes, and this went up to about 71. I ended up buying those calls right here on 822. But yes, that is DQ. And then what else did we do via options? So via options, I closed out 25% of the SPY September 6th 415 puts for $5. I had paid $4.69. This was during the Powell presser. The market was just kind of flipping back and forth. I put this position on in size. You can see it's a 3-star trade. So I was like, I don't know how this is going to go. Let me at least just take a target. Then the market started slipping. I closed out another 25% of it for $7.49. I paid $4.69, so a very nice winner. And then into the bell at $3.40, I closed out another 25% for $10.35. So that's over a 100% return. And I left the remaining 25% on the books. So that is still on my portfolio heading into Monday. And what's good is I closed out some of my common stocks, and then I also reduced the size of my hedge as well. That way, like if the market, rips to the downside, it's not like, oh, now I'm under hedged because I closed out some of my hedge. And then if the market rips to the upside, it's not like, oh my gosh, I left the whole thing on and now I'm losing a lot of the gains. So it's just kind of like tighten up the risk, from all angles. And then what else do we have here? The Twitter August 26th 39.5 strike puts that we sold expired worthless. We kept 100% of the premium. This is the merger arbitrage trade that we've been working on. And then I ended up rolling that out. So I sold some more of the Twitter 39.5 strike September 9th puts. I was able to take in $1.19 for that. So it's never going to make you rich, selling the puts, but it's, you can get some base hits out of it, which is really just what I'm going for. So yeah, heading into Monday, I think you really just got to expect the unexpected. I think it's very highly likely that we end up tagging this 50-day simple moving average. And oh my gosh, we're like about to tag it in the overnight. So yeah, this is definitely a high risk situation. Always make sure that you're protecting yourself, because if you're following an appropriate strategy and you're doing okay, like even if you take some losses some days, that's not a big deal, but you just don't want to take a big loss that could take you out of the game. That is the one thing that you do not want to do. Now, I want to make you aware, every single weekend I do a ton of homework on the market, and I do a top-down market analysis, and that goes into our Pristine Capital weekend market analysis video. I also do a bunch of bottom-up analysis, and that's our weekend watch list video. There's a very high probability trading setup that's one of my go-tos that I'm already looking for. I do believe it's going to trigger next week. And so I just want to make you aware, if you want to go to pristinecapital.net, get signed up, that'd be fantastic. Reach out to me, send me a DM if you're interested. And I'll send you over like a code where you can get like your first month for a discount, and just see if you like the service. But yeah, thank you so much for watching these videos. For everyone that is a current member, thank you so much for just honestly, trusting the process, rolling with it. And yeah, really appreciate your business and just having you in the group. Our group is turning out, really nicely, and it's just great when we have days like this. Honestly, I hate to be like super like braggadocious and whatever, but this was, it's just a big win for our trading careers. So yeah, for me, I'm heading off to happy hour. Thank you so much for watching the video, and we will see you all next time. We'll see you all on Monday.